Welcome to Markets Now. I'm Michelle Roque with Darin Newsom, Senior Market Analyst with Barchart. We're seeing a lot of red on the board this morning with a few outliers, including crude oil and the wheat market, which is a little unusual. But Darin, when we talk about the grains overall, it has been really quiet, hasn't it?
Mhm. It really has. There's just nothing out there really to get folks excited about, the grain sector in general. I guess as I was watching this morning, the big thing to me was looking at the July corn contract with most of the open interest moving over to July. It took out 440, and from a technical point of view, that puts its next target down near 430. So if this market's going to find some buyers, maybe it has to drop that dime again and see if there's anything sitting down there. The commercial side is still providing a little bit of support. We've seen basis continue to firm here through the spring. And I think a lot of that has to do with merchandisers. They're still wanting to lock in some supplies, knowing that we're going into a busy planting season. So getting some supplies locked in short term. But, in the longer term scheme of things, supply and demand still is not bullish. There's still no fresh news out there to spark much interest, and certainly not enough to spark a round of short covering by the non-commercial side, which kept thinking it was going to happen, and it just doesn't look like it's going to, at least not this week.
Yeah, lack of weather issues is
Mhm.
really another thing that's allowing, especially corn and soybeans, to drift, don't you think?
I think so. When we look at the latest 6 to 10 day, we get past this cool period here this weekend, and then things are supposed to warm up, and there's supposed to be more rains over much of the plains and the Midwest. But as you and I were talking about before, a lot of these storm systems just simply haven't panned out here over the last couple of weeks. And as we look at things like the drought monitor and U.S. soil moisture maps and these sorts of things, the problem areas are still showing there are problems. And again, we're getting midway through the spring, meteorological spring here as we hit the midpoint of April. And we just haven't seen much improvement. So as we go forward, I think this is going to get some more attention. Just it isn't right now.
Yeah, no doubt. And we actually got some rain in some of the areas of the Western Corn Belt that were dry. And so, rain makes grain mentality.
Mhm.
Maybe let's talk about weather as well, because do you think that some of the forecasts for some of these cold temperatures coming in is part of the reason that the wheat market is higher on its own this morning?
I think it could be. I think there's certainly that play in the market. But again, we have to remember wheat is the cockroach of the grain world. You have to kill it a dozen times before it dies. And, we've seen these frosts before. We've seen freezing temperatures before here in late March and so on. And what's happened as we look at the new crop winter wheat spreads, both the July, September, December, in both Kansas City and Chicago, have moved beyond the bearish 67% threshold calculated full commercial carry. They're both at 70% or more. Both spreads in both markets are above 70% now. So what the commercial side is saying is, okay, maybe there's been freezes, maybe there's been drought, maybe there's been this, there's been that. But there's no concern right now on 2024 supply and demand. So, I think that's the bottom line. In the old crop, we've got for both markets, we've got weak basis. And in the new crop for both markets, we've got bearish future spreads. So I think that speaks volumes. Our funds possibly doing some covering here ahead of a possible freeze. Yeah, but I don't think it really changes the attitude of the market all that much.
Yeah. Let's also talk about weekly exports this morning, maybe a little bit low on corn. And then wheat, the cancellations that we had in old crop was China. And so did the market know about that or not?
Oh, sure. Yeah, the market knew about these numbers are a week to 2 weeks old when they're released on Thursday mornings. Remember, this is for business at the end of the week ending Thursday, April the 11th. So it's a week ago today. So it's all the way up to that. So yeah, we could see it in basis. We could see it again in how the new crop spreads were acting because besides weather, besides the possibility of what 2024 production might be, now we're adding bushels with larger carryover from the old crop marketing year. So yeah, the market was telling us, supply and demand is simply not an issue, be it increased ending stocks, beginning stocks, or a larger production in 2024. There's just no concern right now about supply and demand.
Yeah. I also want to talk about the Middle East conflict and the geopolitical, I guess, money flow moves that we've been seeing. Interestingly enough, grains have not participated in any of that, but are there other markets right now besides crude oil that might have been putting in some of that premium? Or gold probably is
Yeah.
another one.
Yeah, those are the two plays. And what's interesting here Thursday is we're seeing both of them rally. U.S. dollar index is stronger, so I find it a very interesting combination with the U.S. dollar index stronger, wheat going up, gold going up, and crude oil showing gain here early Thursday morning. So I think as we get closer to the weekend, I think you're seeing some of these funds and some investors in general looking for some sort of hedge against the possibility of renewed chaos over the weekend. So what they're doing is they're buying some crude oil, they're buying some gold. We tend to see this towards the end of the week, and then we'll hold it through the weekend, see what happens. And what's been the kind of the standard operating procedure is getting out of the crude oil contracts once the next week starts. And the headlines are either as bad as what everyone was afraid of, or didn't quite match up with what was expected. So then they start getting out of those crude oil contracts again. On the other hand, they just keep buying gold. And what's interesting here is that it's central banks around the world, but particularly in China and Russia, that continue to buy gold. So this tells us that we also have to look for more chaos, more turmoil, more geopolitical problems around the globe. I guess that makes sense, geopolitical around the globe, but we have to look for more of these problems continuing to escalate as we make our way through 2024.
Yeah. What about, though, there have been some contra-seasonal moves. In fact, you put up a chart on X talking about distillates or diesel fuel is starting to
Mhm.
make a little bit of a contra-seasonal move, right?
Yeah, that's interesting to me. That really jumped out at me this morning as we, saw a sell-off heading into Thursday, and then overnight through Thursday morning, the market extended its break. At that point, the spot month distillates contract was down 15 cents for the week, and if we continue to muddle around down here, the market could post its lowest weekly close of 2024. To me, that really jumps out because again, this is a time of year when we see the energy sector in general rallying, and particularly, we also see that in distillates, and it just hasn't been able to do it. It's just been capped throughout 2024. The most we haven't hardly been able to string two higher closes based on weekly charts together since the beginning of the year. So it's been an interesting development, certainly a fun market to watch.
Yeah. And what's your thoughts about the equity sector? Because we've had a couple of tough down weeks, and some of that could be interest rate concerns again, maybe like you said, this geopolitical thing. But overall, do you see money flow at some point here coming out of the equities, maybe going over into the grains, or where's it going to go?
Right now, could we see a few weeks, if not months, of the U.S. equities moving lower? Yes, they got a little bit top heavy up here. Everything was hitting new all-time highs. So at some point, the money does start to slow down coming into the market. It's just making money on itself. Now, as far as rolling money out of equities into other markets, I think some of the money that's being made in equities is moving to other homes. And when they start looking at the commodity complex, they look for those markets that have long-term bullish fundamentals. And by that, I mean, which ones have inverted forward curves. And so really it's been the softs market. They're weather derivatives, just like grains are weather derivatives. And, we've seen cocoa move, we've seen coffee move, we've seen sugar move in the past. All of these markets related in some sort of, some degree to weather problems around the world. Will it go over into grains right now? It doesn't look that way, even though if we look at some of the other markets in the oilseed sector, say soybean oil and soybean meal, at times they show pretty good inverses in their forward curve as well. So I think there's a possibility of some of it moving over into the grains sector. There just isn't a market right now that just jumps out and says, "Look, we're going to take money away from this soft sector move." And could always go over into energies, and it certainly seems to be finding a home in metals as well. And grains are just a distant thought at this point.
Yeah. Darren, do you think that the meats are vulnerable to maybe liquidation because the funds are still long there with what's all going on in the markets?
I think the meats are a bit vulnerable. Again, similar to the stock indexes, I think they got a bit top heavy. And in fact, on some of their long-term monthly charts, they are showing that they've established the long-term downtrends. So I think we have to be careful here with funds still holding a large net long futures position, particularly in live cattle. We've seen cash weaken. We've seen boxed beef weaken. It looks like Even though this, again, similar to what we were talking about with distillates, even though this is a time of year when demand for beef is at its strongest with grilling season and all that here in the United States, it seems like demand may finally be slowing. These higher prices of beef are finally starting to have an effect. So we have to be very careful with the markets up here, as it looks like there is some downside risk.
Yeah, and the meats don't like uncertainty either, and we
Mhm.
have plenty of that creating volatility. All right, thanks so much, Darin Newsom, Senior Market Analyst with Barchart. That is Markets Now.